The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this 15th day of June. And a number of things are going on. So let me just do this quickly. The E-mini is down 1175. It made a low earlier on of 24, was it yesterday or today? 2416.25. And what's really important about this, what I said to my subscribers to my opening call in the many, many charts that I send, my overview and market today section, as well as my Dow section, as well as my Traders Corner, what I said was, what's really important is that we need to see the Dow down 65 or more at 10 minutes past 11, and the S&P down 9 or more, and the comp index down, I believe I said 12 or 15. So this is what we're looking at. The Dow is down only 47 at 21,327. I'll explain that in a moment. The S&P is down 1245 at 2425. The comp index is down 60. Is at 81? 81 at 6132. The VIX is up 0.71. Oh, yeah, 0.71 at 1134. Couple of things are going on. And why I wanted to mention that at the outset was, within the context of the markets, what I really was looking at was the strength in the XLF, because the Dow now has 5 financials in it. This is the most it's ever had. And the financials are doing best right now. And this is ironic because the TLT is down just a little bit. And the TLT, which is the Lehman 20-year T-bond fund, is down just 4 cents at 126.26, which means that the yields, let's just have a look here. Let me put this up for a second right here. The 30-year, 10-year, and 5-year yields, T-bond and T-note yields, are at lows at this particular time. Look, you're looking. Look, you're just testing the trend line down channel support in. In fact, you just freshly taken it out in the 10-year, but in the 30 and the 5-year, you're just touching that low. You have at least up. This is the weekly chart, and the week's not finished. So this is going to be really important, because what it's saying is that the bifurcation of the market, and to explain it, look at the chart that we have here. You've gone to a G in the weekly chart of wood. This is the Global Timber and Forestry ETF. Looks like it kind of wants to top here. The HGX, which is the Philadelphia Housing Sector Index, has gone to an F. And it's at the point in this particular pattern over the years and years that I've followed chart formations, this little worm-like climb along, like a little worm on a branch of a tree, when it does have a slide, it's usually a very sharp slide. Hey, you want to see an example of that? How about this? Let's go to the SMH. Beautiful, wiggle, 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 climb up the little worm climbs up the 9-period exponential moving average branch. And then when it gives it back, bam, it does it in one session. It just takes out many of the bars on the left side. And we've seen that now twice. And my suspicion is that the SMHs, which led on the way up, have made a Chapman Wave 5 in the daily, a peak F in the daily, and that this is spelling a consolidation that's going to take time. And if there's a 1-to-1 to the downside, you could see the high of 89.72. You could see us go down to the 82 or the 79 area. But I'm just doing one thing at a time, because first, in the dreaded H formation in the Chapman Wave, one has to see the 84.09 level taken out decisively. That's the low of the 12th. Today they're trying to do it, they haven't yet done it. So that coincides with the peak G, maybe it's G/C in the weekly chart close under the 9-period moving average of 83.45. Let's call it 83. A close below 83 suggests, yep, that is a peak G. And then the 120-minute chart has 83.03 as the 200-period exponential moving average. Support, that's a peak F at 89.72. Monthly chart is only in leg C. So I wanted to show that you're looking at a real mix, a potpourri, essentially a bifurcated market where the XLF is holding beautifully. It's up, it's down 12 cents, but it is up very nicely in anticipation that yields would go higher. Why? Because the theory is that when the banks, they make their most profit when the yields start to rise. Now, on the one hand, you've got the Fed saying that the yields are rising, and on the other hand, you've got, I showed you the my triple yield chart, a potential peak F in the daily chart, in the continuous, this is the 30-year Treasury bond. What is it actually called? Is it an ETF? It's a continuous contract. And it's in leg B in the monthly chart, and so forth. This is really good action in the weekly. I'm fascinated because this really says, and this is one of the reasons for subscribers, we went short on a one-to-one basis, the Dow, but we are 300% short some of the other indices. And the reason being, I suspect that the other indices are going to see, I'm not sure how many points to the downside from here, but there's certainly downside activity coming up and time. But the Dow, because of those 5 financials, and I must include Home Depot, because Home Depot maybe, let's see, day today is probably down. Yeah, down $1.23 at 155.56. If it just holds sideways, that's going to be a benefit to the Dow. It's in the Dow. But we're going to be looking at something very interesting because this gap, this island gap spike to the upside in Home Depot was a clue that if it gave it up, which it has, that even in the home builders, you could be seeing some kind of a consolidation going on right now. And that's the reason why I'm suspecting that within the context of the markets, and let me just show you, GE, holding okay, it's down 9 cents, but it's really given back a huge chunk of the whole thing with Imelda retiring and getting a new CEO. That was just rumor, and GE is still headed towards lower lows and lower highs. IBM, where is it today? Is it down? It's up 77 cents. IBM has had its big correction. It's in a sideways consolidation. Triple M, this is my Dow Quartet, still climbing. It's up 5 cents at 210.06. This is in leg F in the weekly chart, and leg C in the monthly, still extremely strong. 3M, who talks about 3M, a multinational conglomerate, and UTX, which is also up 36 cents at 120.37, having made a peak F in the daily, a double top actually, and a peak D in the weekly, and only a C in the monthly. So there is residual strength, and at the same time, I think some of the sectors are going to be vulnerable. Now, I did have in my Chapman wave, one of my techniques is the Chapman wave technique of looking at the trend, Richard Ohm's trend gauge, and I had a reading that said within 2 days it should be a 9 to 11 point rally. There was one yesterday after the Fed announcements that dropped the rally. Maybe today we have another little bit of a spike to the upside that helps the cash indexes.
See, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. Dow's down 43, S&P's down 12. Now, this is going to be fascinating. Look at this. So I spoke about UTX, but wait a minute. The dollar is having a pretty decent day. It's up 54 cents. Remember, all last week I said, I think this is the week coming up that we're going to get changes. I think that the changes are going to involve currencies. They're going to change. Maybe gold actually breaks down. Dollar rallies. Looking at crude oil, what's going to happen with crude oil? Crude oil went lower, but are we trying to form some kind of a base here? What exactly is going on? So let me do this because I think I've got everything up and running again. I need to do this just to check that I haven't got anyone waiting on hold. See if I can get that going. Yep, that's starting to work. Okay, so what I want to look at is that within the context of the markets, gold has hit the 200-period exponential moving average, 1252. It's a level I've been talking about for quite some time. How it hits it hit it back in May, had a beautiful run up to 1300, pulls back, and now the low of today, which is 1250, around about 1252, we're going to see just exactly what happens there. Now, within the context of the weekly chart of that peak C1, C2, now I consider this to be when within the context of chart formations that repeat, and within the template of fractals that repeat. Remember, that's a pattern that gets repeated no matter what time frame. What I'm looking at here, yep, Al, I'm back, so anything you want to post is just good. I'm not sure if that's today. Is that today? Let me just ask Al. Update, please. I don't know if anyone's waiting because I've just got on board. Yeah, we got Victor. Victor, are you there?
Yeah, how you doing? I just have two
great.
for you.
Okay, very good.
I have two. That WFC hasn't been performing too good. Wells Fargo Bank, and check HOS again. I want to see what you think. Remember how that company going back?
Yeah.
As we were talking about?
So give me 1 second because you're just slightly cracking up. So I heard Wells Fargo is the first one that you want to look at, which is at 54.12. Yeah. So the pattern that I'm looking at here, and funnily enough, that you're asking me a question which I was dealing with just a moment ago, and that was that certain patterns, like the double top pattern where I get a peak C1 and a peak C2 where just fails to make a leg D like the S&P did yesterday. I'm just going to show this for 1 second. The SPY went to 245.01 on the 9th. And then what does it do yesterday? It goes to 244.87, misses by a few cents. I call that a peak C1, C2. Sometimes there's still a chance that you could make that leg D. Now, the reason why I wanted to bring that up is that you're looking at Wells Fargo, and what I said to subscribers, and one of the reasons why we went long the XLF on Friday, I think it was, last week anyway, was because there's a cup formation that's forming in the many of the bank stocks. If you look at the XLF, it's a much better pattern than the Wells Fargo pattern. This says that there's a real good chance that if it holds well and it starts to make this leg D and it gives a nice relationship towards the left side, 25.30 previous high of the week of the 3rd of March, there's a real good chance that the XLF will try to get there. And so far, it's holding very well. Now, let's go back to Wells Fargo. So I agree with you. Wells Fargo has had a very nice move. The weekly chart is not as strong. I just want to do another big one, another one of the what do they call them again? Oh, man, there's a word for them. The big banks. Anyway, the JP Morgan Chase. So JP Morgan Chase has also the same kind of pattern in the weekly as Wells Fargo. But if you get to a Bank of America is just slightly better because the most recent low of last week wasn't anywhere close to the previous low, and the others took out those lows. So, but in terms of chart pattern, I suspect that they're all going to go, if they're going to move higher from here, they're going to move higher together. And one will have a better percentage than the other. So now, are you long Wells Fargo?
Oh, no, I was just looking at it. I expect they can keep this rally going because aren't their earnings come out like in 3 weeks, and then they got to peter out. There's gaps in Wells Fargo. They got to close them. They're going to close them when they crash the market. You're going to have a flash crash. You're going to have something going on in August. Yeah,
so, Victor, if they do that, I think you'll have plenty of warning. Because Wells Fargo will become extremely vulnerable. It's at 54.14. If it goes to 55 by Tuesday or Wednesday of this coming week, I think that's very good action. If it breaks down and it closes under 52, just a point lower, 2 points lower. Let's see, 55. Let's make it under, if it closes under 52.80, I think you're right that there could be a much sharper decline. But at this multi-center, thank you. I was looking for the word, multi-center banks, that's peaking in the den. So as a benchmark, what I'm looking at is that the XLF has been making higher highs and higher lows in the weekly chart over the past month and a half. The daily is at a peak C. And I think it's going to try for the 2460s. And if it does that, and the TLT is still holding very well, it says that something else is going on in the banks and that fund managers are looking at the banks as an alternate as possibly money comes out of the tech sector and the high flyers and the semiconductors, and it looks for a home, even if it's temporary. So I'm not thinking anything in terms of crash. And also, there are just so many airs and so many people that are talking about a crash. I'm thinking that there's not going to be a crash right now. It's when everybody least expects the crash. So I do expect that some of the sectors
I think the general public doesn't know what's going on, and they're always the first ones getting taken in the bank. You learn from your mistakes. You know what I mean? You don't lose your second million. You lose your first million, but you learn your second time around.
Right,
and it's the same scenario. Every 7-8 years, we flush out the whole system.
Yeah, and this is the longest we've been without a really big correction.
So
the worst
really
was 22%. So
it's like a rubber band. The longer it goes, you know what I mean, the worse it's going to be.
But that fits into my expression that I believe this is the second part of the coda phase, and that coda phase says that. And I'm thinking I might want to do another one of my webinars to discuss exactly what I'm looking at and why I'm looking at it, and the match with so many periods. And I couldn't even get into it now, but I do think that as long as you can rotate from weak sectors into strong sectors and strong sectors into weak. That's what keeps the market buoyant. So what we've already seen, do you realize that from a week ago, from the last Friday, you tell me, any other time you've seen the NASDAQ plummet? I mean, really, that was like a mini, I wouldn't call it a mini crash, but that was a mini surprise rug pull. And yet the Dow ended up higher on the day.
That's just a shot over to Stern. Remember who was president when they had the working men, Reagan, when they had the crash in '87?
I remember that very well.
They just came in and bought the market.
Victor, what was your other stock that we were looking at?
HOS. HOS.
Okay, got it. Okay, we'll be back. Hold on, we'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. This is fascinating. So Victor wants to look at HOS. We looked at it the other day. I said, I'm not quite ready to say anything about it. I'd like to see how things unfold over the coming few days. It's trading at $1.82, and this is not for anyone. This is for Victor. This is you got to know what you're looking at, and this is more like an option than anything else. So Victor, what I'm looking at is it's held quite well. It hasn't gone back to the low under 150, and it hasn't. It's kind of hugging the 9-period moving average. It's a tad under it. Now, this is the first time I can actually look at it and say, you know what? Because I'm looking at rotation, and this is Hornbeck Offshore Services, because it's in the oil area, I'm going to say to you, This is the first time that it's intriguing. But that doesn't mean to say I would go whole hog and I'd be buying it right now. But I am going to suggest to you that if you're interested in this stock, I'd give it another day, give it Friday. I'd even say if you have patience, give it Friday through Monday. And I'll tell you why. If it holds very well and it doesn't break into the 1.76 area, but instead just kind of stays around here, maybe even moves up a little bit, and then tomorrow it actually goes to 195, 192 to 195 instead of down to 176. I'm going to say to you, you know what? As an think of it as an out of the money option. I'm not going to say a non-expiring option because this thing could go broke and then it will be expiring. But just as a longer term, as long as it stays in business, then I would say to you, you know what? You could nibble on it. And if it manages from the nibble that you've got, if it actually moves up to 2.01, 2.02 by middle of next week, you could even add another little position. But don't get carried away. This is purely speculative because in the red candles, I don't have to tell you, you're looking at it. The weekly red candles, just dozens of red candles and maybe 6 altogether, green candles in the weekly chart. Going all the way back to 2016, going back from the high of December. So it's just looking at it and say, as a speculation on a percentage gain, but not getting carried away, just treating it as if it's just a tiny portion of your portfolio. If you want to look at it, HOS at 1.82, give it a day or two, and within 2 cents down, 4 cents up, if it's holding by Monday, I'd say, you know what, you can nibble at it because it's held the worst of the other stocks in its sector that have gone to lower lows. Does that help you a little bit? Oh, maybe Victor's not there, but I'm sure Victor's listening, and that's what we were looking at. So, Victor, that's what I'm going to suggest to you with HOS. But we've had 2 shots across the bow, last Friday, and to this morning. And out of each one of those, the market itself has sort of come back in a very selective way. But in terms of HOS, this horse hasn't sailed yet. So I'm looking at it, and I'm mixing metaphors especially. So, okay, let's go on. We've got questions here. Let me do this, the usual questions. I did the XLF. Let's go to Goldman Sachs. Goldman Sachs is holding pretty nicely. It's down $1.27 to $2.25. And the weekly chart has started a gray leg A. They're all doing the same thing in the financials, trying to make a weekly cup formation, and they at various degrees. The stochastic is at 19%. That's okay. It's not great. It's actually very weak, but it's at least rallying. And the MACD hasn't turned up. So it's got a long way to go. But price-wise, I like Goldman Sachs as it's standing right now. BRK.B has been I've done an analysis of it for my subscribers. We just missed by a few cents getting in the 169 area. It's at 170.14. I think if I decide over the weekend that this is something we want on the next day or so, it's acting well. It's not great, but it's acting better, but it has a nicer cup formation in the weekly chart than the others. Morgan Stanley, I get asked about that as well. MS, Morgan Stanley, that's an even better pattern. It's got a leg A and a B. It looks very much like the XLF. It did go to a D in a left side, right side price time match in the daily chart. It's pulled back from the almost 46 area down to the 9-period moving average in the 44s, and now it's at 44.92. A little bit better pattern. Another question I had was, let's see, what happened to all those? There it is. Citi, Bank of America, I did. Citi is holding much better. Actually, Citi is one of the strongest of the group. At 64.55, Citi's a leader. I forgot all about that. Citi's looking much better. VOD, well, that's a telecom, right? VOD. That was just a question in the den. This is Vodafone. Yeah, Vodafone, be careful. It's got the H pattern. I think after that peak D at the 200-period exponential moving average, VOD is the symbol, trading at 28.66. I think by the end of Friday, tomorrow afternoon, I'll probably put it. Now, I'm not yet sure I can put it down arrow because the MACD is still good in the weekly chart. No, be very careful. In fact, the telephone companies are holding okay, but they're not. As dividend stocks, they're a little too risky right now. That was that. KRE was the next question. KRE, there we go. KRE is, in fact, the S&P Spider Regional Bank. This has got that pattern we've been looking at, slightly higher in the weekly chart. Yeah, it's looking quite good, holding very well. I think this is the area that money's going to drift to. I just want to see by the end of the day if the bank sector gives back some, because that's going to be important. I want to see what the rotation does. I want to see if the IWM is still weak. I want to see if the SMHs are still weak. I want to see if the Qs are still weak. The XLK, what is the XLK doing? XLK made a top at a peak D. Yeah, there's that H pattern. The Vodafone has the same pattern. Remember, the patterns that are formed, the fractals, get repeated in all time frames. So just be real careful. All right, so that's that. The next thing is Nike. Oh, Nike I haven't looked at because Nike had a very nice rally, went to a peak D. You see, this is what I'm afraid of, that so many of these charts had very good bounces. The weak sectors had very good bounces, but many of them actually have gone to a D now. And that says D for downward. You've got to be a little careful. All right. So next question I had is, I'm going to skip that because I want to go to Vail. Valet. Valet is trading. I'm just going to say in the whole commodity area for at least another day or two, I'm just holding off. They've shown no strength. If you look at the TRCCI, which I haven't looked at for a while, look at that, lower lows. And we discussed this. I said, this pattern is formidable. This large arch formation in the monthly chart, it suggests that commodities could be going lower. And lo and behold, you've taken out the left side low in the daily and the weekly chart, and now the monthly chart doesn't have anything as support. So it'll be the candle, this candle of April of 2016, a high of 409,376 for $TRCCI. The Thomson Reuters continuous contract, equal weighted commodity contract. That's the bar that's going to have to hold everything. So I'm watching it closely. If by Monday it's suddenly given a nice bounce to the upside and goes from 397, where it is now, into the 400, 402 area, that would be really important. That would be this whole rotation thing. Basil Chapman, Dow's down 24, S&P's down 10. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So one of the reasons why I refrain from getting back into the SLX or any of the steel stocks, in the background there was fundamentals, because I think that they aren't ready, not in this particular framework, not with the orders, etc., with other areas that I'm looking at. So the SLX is down 98 cents to 35.43. This is saying that it doesn't have the kind of strength that's necessary. It's made a PD in the monthly chart, a PD in the weekly chart of 45.39 in February of this year. Now trading at the 35 area, 10 points down. I think this is a problem. It's a problem. It's part of this whole rotation. Something's going to work and something's not going to work. Look at, so that's what I want you to look at. Then a question about crude oil. Let me just do crude oil now, because crude oil is just, as I read it, crude oil is an area with the left side, right side price test of the May low and the monthly chart. If it can hold into Tuesday of next week, that's 3 sessions, that's the rest of the day, big day today, the whole of tomorrow, Monday, and this is called a Tuesday afternoon. If it can hold and not close below the low of 44.10 of the 5th of May, then there could be a bounce. But I don't think I can call it anything more than a bounce right now. But if by Wednesday, and I will not be here, I'll be doing my newsletter almost every day, as always. But I will be away, and I want to make this a little bit like Technical Friday, because there's just a chance I might not be able to do tomorrow. So this is what I'm looking at. Crude oil. If crude oil, I'm not interested in what it goes down to. I'm interested in if it can repair the damage from yesterday's candle. In other words, scandal and candle. Yesterday's high was 46.49. If by Tuesday of next week, crude oil is trading in the 47.30s, let's give it a break, 46.60s to the 47, let's call it 47.20s. Then what I'm thinking is, great, now you could see a retracement all the way to the 48s, but I have to only call it a retracement. Why? Because it's going to really help the monthly chart, because I can just tell you this, a break into the 43s, that's goodbye crude oil. It's a real problem. All right. And I do think there's a glut of oil on the market. It just seems, everywhere I read, there seems to be a glut. Okay. So that's the crude oil. So yes. And you're looking at sentiment. You're looking at a whole bunch of things suggesting that crude oil, let's see if you don't mind, that crude oil, no, the sentiment's bad, but it's the 9-period moving average at 46.05. It hasn't been able to close above the black line. In fact, it's only been above it once ever since the breakdown on the 25th of May. That's a whole month that a month and a half, 5, 6 weeks, and it still hasn't closed above the 90 man. That's not good. All right. Next question is OSX on track for the lowest monthly weekly close. Yeah, so let's just do that. So this is dollar OEX, and that is the S&P. Oh, wait a minute. OEX. OSX. The OEX, like the Qs, made a peak C, and this is the S&P 100. And it's saying to me, not every one of the ducks is in order, but the technicals suggest that that was a top. So let's go to the OSX. OEX is the OEX 100 S&P. Most people don't even know it exists. Some of us used to trade it all the time via options. I did. Anyway, the OSX is trying to make the double bottom. Remember, we're looking at HOS for Victor, and I said, hey, that's holding much better. This isn't holding. So the OSX, I love this arch formation that's successful. I hate the arch formation that breaks the lowercase h, especially the one that goes to a lowercase m, breaks and then cannot rally back. That's the problem. So let's just make it simple. A close in the OSX below 135.03, no, below 132.20 in the next 3 sessions, and with no bounce back into the 134s is very negative. A drop and then a real quick sharp move, because the technicals are actually improving, a real sharp move back into the 136, 137 area within a couple of days, we'll say, great. Finally, we've got the oil service area is able to rally, and it could be a pretty nice rally, a sharp, sudden surprise. That's why I'm saying this week is really critical for most of these. Look at this, EUR, USD, euro-dollar currency pair. Look at that. It broke down. I drew that arch formation. I said this is called, in the Chapman wave parlance, it's called a rogue wave. How am I going to get that? A rogue wave peak G. And that rogue wave is, you remember, the expression is that if you are looking at something that shows all the technicals indicate you could be short, and you go short, and then suddenly there's that one pop-up that lasts just long enough above the previous high to make all the bears who cover, just long enough for them to cover, and all the bulls who got out of this fabulous move to the upside say, oh my God, I should never have got out. I'm getting back in, and just long enough. And then by the end of the session, you close at the low, and then a horrible candle follows like this. That's called a Chapman wave rogue wave. And that applies that you're going to the beach and you see the sign at the beach that says high tide at noon. And at 12:06, you think, okay, tide's going out. I'm going to sit on the furthest rock out in the ocean, get my suntan lotion on, my sandwich, my drink, my book, and my dark glasses, and you rubbing the suntan oil in, and splash. Where's that cartoon? I got that cartoon somewhere. Splash. The wave just knocks everything out of your hand. But you look around, and the tide's going out. You don't know what. That's the wave that didn't see the sign, because the tide had really turned. And the tide has turned for the euro-dollar, at least for the short term. It won't have tied fully until it takes out the low of the 30th, 1.12046. But it's a leg D in the weekly chart. That says everything we looked at for the lowercase h that goes to lowercase m in the monthly chart that can rally sharply towards and touch the previous high of importance. That was the high of the 30th of November of 2006 at 1.2989. Well, we just did that. The high right there, 1.289. What was the high? The high this week was 1.2952. Oh, I guess it just missed it, but that was the idea. So this says be a little careful, because the dollar could have more strength, and that means that gold could drop much more. I'm watching it real closely. There's that double top, peak C1, all these Chapman wave techniques. If you got my CD introducing the Chapman wave technique, most of these techniques are discussed right there. Okay, so Walmart was doing fantastically. Where is it today? Question. Walmart made a peak E top in the Chapman wave right there. And that's suggesting that that is a daily sell mode, at least just for now. I'm calling it a sell signal. It should be a sell mode, but I should wait for the end of the day. Probably should wait for the end of the week. But it's only a peak C in the monthly chart. So this might just be a kind of a sideways pullback to build strength to go higher in Walmart. We've got a segment coming up after this. I'll do a little wrap up on what I'm expecting, just in case I'm not able to make tomorrow, and I will not be here next week. But I'll be doing my newsletter every day. Basil Chapman, Target Definitions out, LSN 24, S&P's down 10.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So just let me get to these. I had a bunch, I think, very important questions. I think it's important to deal with them right now. Tip was a question. What I think of Tip, this is the inflation, the iShares Tips. Bond fund. Years ago, I used to read about Tip as an inflationary this and inflationary that. I then found that it was not. Once I found that out, I just took it off my radar completely. It doesn't work that way. And Tip right now is trading at 113.73, down 41 cents. It made a peak A, B, C, D. Made a peak D right there. It's in the arch formation. It just seems done. So I'm just going to say, it looks to me like it's going to go. It'll go to 113.73. It'll go to 112.70 probably before it breaks above 114.50. So dollar down is quicker than $1.25 up. That's what I'm looking at. The next one was I'm in UGAZ at 13.86. UGAZ, UGAZ. So UGAZ right now is the direct. Is this direction shares or is no? These are not direction. These are ARCA. okay, 3 times long natural gas. So if you don't mind, you're in, I'm just going to say to you, Sean, you're in at 1386. You've got to give it a little bit of room. If 20 cents is too much, make it 15 cents below your entry price. But if it's able to close at 350 today, 10 minutes before the close, if it's trading at this level, I would immediately raise the stop. If the stop is active through the evening, I'd raise the stop to 1386 to maybe 1396. Give yourself at least a cushion there, and then deal tomorrow with what you've got. But this is exactly what I was talking about, that this week could see inflection points being hit and reversals. This seems to me that there's a chance that natural gas can have a nicer bounce because it's held. It hasn't gone to the left side low bar. It's above that. That says it can have a rally from in UNG. This is the United States Natural Gas Fund trading at 686 up 24 cents. It could rally to 721, the 9-period moving average. Then just raise your stops, take some off at that particular point, and hold the rest. Okay, so I hope that helps you. And the next question was, real quickly, oh, did I lose that? No. Oh, and Alan wants to know, I'm in PCMI at 2675. PCMI, 26. Whoa, 26. I don't know what to tell you, Alan. You should have put your stops in. Naughty. Now, all I can say is that there's a chance that it's going to try to double, quadruple, whatever bottom right now. But really, if you say to me, would I buy it or would I sell it? I say I wouldn't touch it right now, because if it takes out $17.90, it's going much lower. And if it bounces to 1930, you could have a bounce, but it's stuck in a range. Please do me a favor, think it through. I'd be prepared to take something off. Personally, I would just take off at least half, and I say, what, I have to make that money back. I'll do it over 6 months, that particular money on that particular stock, and try to forget about everything else because you want to be fresh. So, and WLND, WLDN, Wild and G. I haven't heard of these. Wild and something other, Wildan Core, trading at 30.32, made a peak F top in the daily, up in the 34s. It's now trading at 30.32, and you're in at 35.68. This one, it has a much better chart, but it's got a Roman candle near the high in the weekly chart. If at any point it trades at 29.36 for more than a day, it probably could go down quite a bit. Please put a stop in, and that stop could be at 29.53. So that's what I'm saying right now. If I'm here tomorrow, I'll be able to take another look at it. Be careful. This one has the potential to rally up to 31.75, then raise your stop tremendously. Folks, have a great day. I don't know if I'll be here tomorrow, but I won't be here next week either way. So just watch out for parameters that you're looking for, and we'll see if the mixed market continues.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,